Hi, I'm Barry O'Donnell. I'm Head of UK Shopping Centre Investment, and we're going to talk today about the Q4 quarterly report and the year end for 2014. Q4 was a very busy end to 2014. There was 1.5 billion of shopping centre transactions done. That was in 40 transactions, which included a couple of portfolios, a couple of large portfolios. The volumes over the year was quite even in terms of Q4, as I say, was 1.5 billion, Q3 was 1.59 billion, Q2 was 1.43 billion, and Q1 was 1.31 billion. So quite even over the year. There was 5.83 billion of shopping centre transactions done over the year. That's well up on the 10-year average and a big increase from last year where 4.45 billion was done. The year before was 2.5 billion, so there's been a lot of growth in the shopping centre market. The makeup of the buyers was very interesting in 2014, and that there was a change with a return of the funds. 35% of acquisitions were carried out by funds, 34% was carried out by REITs. As the market returns to rental growth, the REITs have been more aggressive. And the breakdown of all transactions in 2014, we had 101 centres change hands, which 70 transactions as a number of portfolios were done. Of those transactions, sub 20 million was 26, 20 to 50 million was 16, 50 to 100 million was 8, 100 to 500 million was 19, a massive improvement on the year before, and there was only one transaction north of 500 million, which of course was Blue Water, which was carried out in Q3. There have been new entrants into the market, and we predicted actually way back in January in our breakfast presentation that we'd seen a lot of Asian investors in the central London market, and we felt and we knew they were looking at shopping centres, and that has happened now over the course of the year. If you go back last year, there was 0 transactions done by Asian investors. This year, nearly 20% of the market, nearly £1 billion, has been done by Asian investors. That's a host and a combination between China, Malaysia, Korea. Some of the larger transactions, Cabot Circus down in Bristol, was a sovereign transaction partnering with the existing owner Hammerson. Land Security sold 50% there. Centre in Uxbridge, which was an 80% partnering, 80-20 with Into, another REIT. Livingston up in Scotland, Land Security have just sold that centre. That was a 100% sale, where Hines have partnered with some Hong Kong-based money to purchase that transaction, which is well over 250 million. Also in London, we have 2 schemes, Hammersmith and Fulham. They've been bought by CBRE Global Investors, again partnering with Asian money EPF. And also coming into this year, we have a large scheme in Kingston, which is under offer again to a sovereign fund from Asia, and that is approximately around £200 million and will probably transact in Q1 of this year. I think the outlook for 2015 will be good. We had very strong IPD returns last year, 17.1% in retail. The forecast for this year is 12.2%, which historically that's very healthy returns. I think there's going to be demand across the piece. There's going to be a number of banks bring their properties to the market given the pricing uplifts we had last year, and there'll be demand for those. I think there'll be selective demand from UK institutions on some of the larger lot sizes, the kind of mid-market, and demand from overseas capital, which again has come to London and is expanding further into the shopping centre market. So all in all, I think 2015 will be positive.